Welcome to the Women Choosing Growth podcast, where we feature inspiring stories of success, challenges of growth, and lessons learned from women entrepreneurs, industry experts, and thought leaders who have been through the growing pains inevitable as an entrepreneur. Whether you are just getting started or are looking to scale up your business, our show is designed to provide you with the tools, resources, and community you need to grow your business. Join your host, Tina Sue, a lifelong entrepreneur and business growth advisor, as we explore topics such as marketing, sales, finance, leadership, and personal growth, all tailored specifically to the needs of women entrepreneurs. So if you're ready to grow your business faster and smarter, then this podcast is for you. Thanks for tuning in, and let's get started.
Today's guest is Hilary Hendershott, MBA, certified financial planner, founder of Hendershott Wealth Management, which is the fee-only advisory firm helping high net worth women and couples build wealth and with a tax-smart fiduciary approach. Also a TEDx speaker and creator of the Money Operating System. Hilary has also been named Investopedia's top 100 financial advisors 6 years in a row, featured in Forbes, NBC, The Wall Street Journal, and the host of her very own podcast, Love Your Money, Wealth, Money, and Financial Advice for Women. Today on the episode, we cover a lot, everything from what is the stock market, why diversify, what a stock market is made up of which kinds of funds, what to look for when we're looking at investments in both the public, like the stock market, or private investments, real estate, private equity, things like that, and what opportunities, what risks. And it all starts with your money mindset and your own relationship with money. So we cover a lot in this episode, but no matter where you're at on your investment knowledge or an investment journey, reinvesting into your business, or taking some of those profits out and starting to invest for your own family and your own future, or if you're not there yet, but you want to learn more about when the time comes when you do have that profitability to be able to invest in your own life, I recommend not only this episode, but you'll hear me talk about her podcast as well, which is amazing and full of information. So start here. Let's dive in with Hilary. Welcome back to another episode of Women Choosing Growth. I am your host, Tina Sue, and in the spirit of growth, both personally and professionally, we have another wonderful expert here with us today, Hilary Hendershott. She is going to share decades worth of her knowledge just to simplify money management. So we have so much to cover, but let me first welcome you to the show, Hilary.
I feel so welcomed. Thank you. I'm excited.
Before I dive in, I actually am going to give your podcast a plug because we can't cover everything today as much as you have. What do you have, like 300 episodes on your podcast?
Almost. Yeah.
Yeah. And I absolutely love it. It's so informative. Basically everything from what the heck is the difference between an HSA and an FSA, which I've definitely had people ask me the same question, and tax strategies, college, like what do we do with our kids' college accounts, and all of that basic information. So no matter where someone's at on investments or money management, if you're not going to listen to this entire episode, you have to at least go out to your Love Your Money podcast. It's amazing.
Thank you. And yes, I call my listeners money lovers.
Or just wanting information, right? It's educational.
It's educational. And one of my favorite things to talk about really is the psychology of money. So that really gets into the name of the podcast, Love Your Money. It's kind of a play. It's like love, comma, your money, because your money can write you a love note. But also like the idea that we would call ourselves money lovers. It's like, is that okay? Is it okay to want more money? Is it okay to say, I do enjoy having wealth in my life? And, my position for women is it's really time for that to be a stake in the ground. So it's fun. And I think our mindsets and our money beliefs are fascinating and so framing. They really create everything about how you earn money, how you save money, how you spend money, and so it's important to dig into that. So thanks for the plug.
Yeah, no, I love it. And there's so many. So it's like any topic. You got a question, go to her podcast. So before we dive into that, because I definitely want to talk about mindset, because I think that is the foundation. I feel like there's a couple different experience levels, if you will, with investing in general in this just money, what to do with it, how to make it work for us. So I feel like our listeners are in one of three buckets. One of the buckets is going to be they're in the stock market, they maybe like they're experienced, savvy investors. So they probably already have some money out there. Maybe they have other equity plays, real estate, all kinds of things. Then I feel like there's a second bucket, like a middle group who might have some, like a 401k, they might be dabbling in the stock market, but not really sure whether they're doing it right or if it's what they should be doing. And then I feel like there's a third bucket that is, if they even are participating in any kind of making my money work for me, they're afraid of that. So I want to reassure our listeners that what we're going to share today is going to help anyone in any of those buckets, because we're going to cover it all in a short period of time.
In a short period of time.
In a short
in a digestible way.
Exactly.
And smile.
Exactly. And some humor.
Yeah.
Yes.
Stock market humor. Oh, I should have come prepared with puns. I have to think of some. Let's do it.
Well, I know you have a Chicken Little story, but we'll save that. But before we get into all the good stuff, I know that you had a personal experience with mindset money. Would you mind, or money mindset? Would you mind sharing some of that?
No, not at all. Gosh. Yes. So, rewind about somewhere between 15, 17, 18 years ago, something like that. I am in my first several years in the financial planning industry. So I was a financial planner. I was working for someone else. And so I'm advising multimillionaire clients during the day what to do with their investment portfolios. And I'm coming home at night to a stack of bills on my counter that I won't open because I can't pay them. And what was true about me at that time was I was a person who professionally disappeared money. I was earning decent money. I mean, I came out of college during the stock market boom of 1999, 2000. I was earning over six figures pretty quickly. I mean, and if I used to say, if I earned $100,000, I would spend 110, or some years 120, right? Money just completely burned a hole in my pocket. And this all came to a head one day. I pulled my leased BMW convertible into the gas station to get gas. And I had two credit cards and a debit card, and that was it. And I put one credit card in, that was declined because it was maxed out. I put the next credit card in, declined, maxed out. I put my debit card in, and my bank account was empty. So I'm sitting there with a $50,000 vehicle, and I can't afford a tank of gas. And I literally, this happened. I walked home from the gas station because I was on empty. And I had a little chat with myself on that walk home. And I said, look, I have a degree in economics. I graduated summa cum laude. I have a head for numbers. Okay. So it's not the arithmetic of personal finance that's causing this problem, right? Like, I have the math skill set. I'm also a financial advisor by trade. So what is different about me versus all my friends and colleagues I see around me who are at the same place in their career as I am? They're building wealth and I'm disappearing it. I'm dealing with debt. I'm having financial emergencies. My parents would have to bail me out of stuff, come get me, pay bills for me. It was embarrassing. I worked my butt off in college so I could have a career that would help me build wealth, be fulfilled and put my resources to good use on the planet, but also build wealth. And it's not going that way. And what I saw was that, of course, well, my behavior with money must be different than theirs. And where does behavior come from? That comes from psychology. And so I had to get humble and admit that all the book learning I had done had not made a difference for me. And what I saw was that when I was young, and through no fault of my parents, okay, my mom was a conservative spender. She had a good income, but she saved a lot of money. So it was like about, not having the frills. So there were lots of things that I wanted that I didn't get. For example, I was the starting center on the high school basketball team. Okay. Everyone had Nike high tops. My mom took me to Payless Shoe Source. Do you remember
I do.
And I got Pro Wings. And I had to wear those on the basketball court. Right? I called them Likies. Okay, that was a joke. They're Likies.
That's
awesome. But it was embarrassing for me. And so what was true for me for until that day, I'm walking home from the gas station, leaving my convertible BMW there because I can't afford a tank of gas, is that there was never enough money. That was my reality about money. And the really interesting and insidious thing about that mindset, that money belief, is that you have to prove it true to yourself all the time. I mean, we've all heard that the human brain cannot grapple with two things being true, right? Yes. So if I believe there's never enough money and my bank account gets filled up with a paycheck of, I don't know, $5,000-$6,000, something like that. Well, now there's money. So my brain goes, must spend all of it. Right?
There it is. Get rid of it.
There it is. Exactly. We must continue to prove it true that there's never enough money. And, like I said, my mindset was having me earn 100,000 and spend about 110, maybe 115, something like that. There's other people who earn 100,000 and manage to spend 200,000, right? I mean, I've seen that. And so I became, like I said, I got real humble. And I mean, I cried. I told my parents, I told my boss, I told my friends. I said, look, last week I was buying you drinks at the bar. This week, if we're going to dinner, you're paying because I don't have money.
Yeah. And I'm walking because my car is at the gas station.
You have to pick me up because I'm not taking the bus. Right, exactly. And I lived like a pauper for a couple years, and I negotiated my credit card bills, and I gave the leased BMW back. I actually lost a condo to deed in lieu of foreclosure, etc. I did all the things. FICO score of like, I don't know, it was like in the 400s.
Hold on. And this is while you're a successful financial advisor working with
I was starting out. I don't know that I was successful. I was entry level, right?
But you're working with people who have extra money. I mean, you're actually like...
Yes, it was a crisis of conscience. It was such hypocrisy. I really had a lot to clean up. And in the beginning, when I started getting honest with people, it was mortifying for me. I thought these people are going to think I'm a loser. And what I found was that the more honest I was about how much money was in my bank account, the more I tightened my belt and spent less than I was earning, the more I put integrity into my financial ecosystem and shared with people, that's how I was. This is what I'm creating. And my behavior was aligned with what I was saying. I found that the story was actually my path out. I mean, I have continued to tell that story. I've told this story on almost every stage I've been on. I tell it on the podcast all the time. And it has no hold on me. There is no current shame. I remember the shame. It was there, but I'm not embarrassed about what happened in the past anymore. My present is so much different, right? Yes. I became a student of behavioral finance and money psychology. I started attending, the other track of continuing education breakout sessions at the financial planner conferences, right? Mm-hmm. It used to be I'd be in the investments ones. Now I'm in the money psychology track, right? And I heard the term overspender for the first time. And I had never heard that term. It's pretty ubiquitous now, but it wasn't at the time. And I had never heard it. I didn't know exactly what it was, but I knew when I heard it that I was one.
You're like, that sounds like me.
Yes, thank you. And, I had to complete I had to dig into the beliefs. First of all, I was a child when I decided there was never enough money. I called my mom. I thought we were going to talk about how poor we were. She says, no, Hilary, I have a fully funded retirement. Like I did the right thing with my money, So again, no fault of my parents. It was a child who created this belief about money and then ran with it for 20 years. So I through that process and exploration, I got to unravel that, rewire that. And I used that story to build my business. I went out on my own, created Hendershott Wealth Management in 2014. And wow, now my business valuation is almost 8 figures. My personal net worth is over 8 figures. Am I saying this right? Yeah. I'm saying,
How many commas? We got 2
I'm
commas.
like, yes, correct. Basically, I work now because I want to. So
Multi-millions. Yes.
multi-millions,
Yes.
multi-millions. I work because I want to, not because I have to. And I say that, to evidence that it is possible. So I say, no matter how money has gone for you in the past, you can have an abundance of it in your future. Like,
Mhm.
I am the Joan of Arc for that. You can have any result in your financial life that you create as long as your mindset and your actions, your behaviors around money are aligned. Okay.
Mhm.
And there, obviously there's a lot that goes into that. Um, uh, so that is really the reason I founded my firm, to be by women for women. Because women tend to be very disempowered about money, right? And you just mentioned
Yes.
it, talking about your listeners, the bucket 3 folks, and maybe some of the bucket 2 folks, who aren't really sure what to do with our money, because we've been tapped on the shoulder by the financial services industry, said, don't worry about a thing, honey, right? You just do what I say. I don't need to explain things to you. Nobody took us aside in high
Yes.
school or college and said, this is how you grow your money. And by the way, welcome to the old girls club. No, that's still not a thing.
Yeah.
Right? So
And nor
there's
will
a
we ever call it the old girls
I know,
club.
I know, I know, I know. I talk a lot about the difference between Wall Street and the way I do things. We still, it's the same suite of services, right? People need to
Yep.
talk about their taxes. They need to talk about their investments. They need to talk about their spending, their employee benefits. That's all the same, but we deliver it in a vehicle that's like this compassionate, empathetic, understanding, egalitarian, shoulder to shoulder, deep level of respect and love for people. And all of that is made possible by that failure of my past, because I
Yes.
got so humbled, right? And so I'll never forget that. So it's become really part of who I am.
Yeah, that's exactly what I was going to say. That probably was a wonderful pivot in your life, because that makes you so much better in your world, especially when you're dealing with some people who you may recognize have the same type of challenges with their money mindset.
All right, before we dive back in, I want to take a moment to talk about something that can take what you're learning today in this episode, as well as our previous episodes, and turn it into something that is real strategic growth for your business. For example, if you're feeling inspired by what you're hearing today, maybe you want to improve your leadership. Maybe you want to refine your systems. Maybe you want to build a more scalable business. Maybe you just want to get out of your own way and break free from those limiting beliefs that may be holding you back. If are you feeling that way, then you are exactly the kind of entrepreneur who will thrive in our strategic shift program. You see, it's designed for women entrepreneurs just like you, who are established, ambitious, and ready to build something that is not just successful today, but is positioned for more growth, long-term value, and freedom, right? That's why we're in business in the first place. In this program, you'll get proven framework, tools and resources, financial insights, strategic mindset shifts, everything that you need to work methodically through the growth of your business. And the best part is it grows with you. This isn't a course that you just take once and has basic business information in it. This is something that has the actual tools as if you were working alongside a coach to help you build the foundation and continue to build on it year after year as you continue to scale. It's even designed to work with your leadership team once you get to that point in your business. So, if you're serious about building a business that is valuable today and continues to grow in value while you're not having to work harder, then check out the strategic shift on Tina-Sue. Look for courses and look for strategic shift. So, let's get back to our show.
Let's go
Yeah.
back there, because my childhood, I'm older than you, but I'm not sure how
Yeah.
old your parents are. But it was the same thing. My parents, we were so poor. Sears was our go-to for all the things. Well, everyone
I
else
do
was
remember
shopping at the
Sears.
mall. Sears catalog, because we didn't have time to actually go shopping mostly. But turns out my parents were stocking money away. Our mortgage was paid off by the time I was 12. And I remember thinking, we threw a big party. And I remember thinking, I guess you just pay off your mortgage in a few years. Like who does that nowadays? They're living their best life retired. So
Good for them.
we also had the money, but they were sticking it away. But never do I remember a time when they told me about where they were investing or what they were doing with that money. So
Right.
I had to learn it myself too. So I still, I guess my mindset was always that there isn't enough money. So I still, my husband teases me about like, you've got like money in like coat pockets, that extra pocket of your purse. Like I have money
Oh,
stashed
see, this is
everywhere.
an archetype too. Yes.
It is,
Yep.
yes.
Yep.
That's why I'm sharing my childhood because similar to yours, apparently we weren't as poor as I thought we were, but I still squirrel it away and, to have extra, the backup. But so let's start at the beginning because I think that is a huge thing also why your podcast is so wonderful because there wasn't a whole lot of education for most of us women. Like you said, no one was sitting us down and explaining that, hey, here's what we're doing. Here's the reason why we don't have the new Nikes is because we're throwing, 25% of our income in an investment.
Correct.
Yeah.
Because you're not getting the name brand shoes because that money went in my 401k, girl.
Yeah. This is for mom and dad when we retire. So you got school lunch, don't you?
You're
Are you
fed.
going? Yeah, exactly. We were never hungry. We were not poor, which I understand some people were, but yeah, it was that necessities were covered and the rest was socked away. And I'm so happy that they did that because they are living their best life now. They have more
Right.
money now that they're not working than they did when they were working.
Yes. Same with mine. Yes.
Yep.
Correct.
Exactly.
I'm like, you living a good life, Mom.
Exactly. Wouldn't have it anyway. But so for some of those folks in that third and possibly second bucket, can we start with just some foundational, like when we were talking about the stock market and investments, give us the foundation of what that is, what that looks like.
All right. So first of all, everyone who's listening has a picture of the stock market. You've got a narrative or there's a story in your mind about what the stock market is. I will assert that story either came from mostly from the financial news media and or somewhat Wall Street, okay? And what you read in the media, first of all, the job of the news anchor is not to educate you so that you can steward your wealth to a successful, financially free retirement, right? No, the news anchor's job is to grab you by the amygdala and terrify you so that you will tune in and you will choose that news show over Housewives of Atlanta, right?
Absolutely.
And so if the stock market, which has natural ebbs and flows, if it goes up, it's a bubble, it's definitely coming down. If it's going down, it's crashing, it's never coming back up, right?
Yeah.
It's always, and that's the Chicken Little. That's the Chicken Little story, right? Chicken Little always said the sky is falling. If you listen to the financial news media, the sky is always falling. Right now I'm having people ask me, I mean, goodness, they love Donald Trump. So Donald Trump has talked about firing the Fed chair, right? And so now the media is telling us we're going into a recession. No, I'm not commenting on that at all. However, just notice the sky is always falling.
Yes, exactly.
So here's the truth about the stock market. So first of all, let me give you an empowered story about what the stock market is. The stock market, first of all, is your opportunity to give your money to really smart, competitive CEOs and boards of directors. And in exchange, you get a pro rata share of the profit that company produces in exchange for the money, with the money you gave them. The stock market really is a scoreboard for creativity, for competition, for all the publicly traded companies around the world who are working very hard to create customer value and shareholder value. Some companies fail sometimes, but that's why diversification, right? That's why you buy a lot of stocks, okay? The stock market truly is the greatest generator of individual wealth in human history. And I don't say that lightly. There is no other place where individual investors have made so much money. I have some numbers with me, and I'm just going to share them with your audience.
Please do.
Okay.
Yes.
If you had invested $1 in the stock market back in 1928 in large company stocks, so basically the S&P 500, you would have $10,049 as of December 31st of last year. Okay. So multiply $1 10,000 times to get $10,000. If you had invested in US large value stocks Those are just traits of companies, okay? Big companies that are trading at a discount, large value. That $1 would have turned into $25,000. And if you had invested in US small value companies, again, these are just indexes, you can buy them, you would have turned $1 into $166,000. If you had invested, I like to double check. I always question myself on this math. But that means if you invested $100,000, you would have $16 billion. So turn $100,000 into $16 billion. Now, I know that most of us don't have 100 years, but all of us would take half that.
Sure.
Right?
Absolutely.
Your investing lifetime is the rest of your life. You don't stop investing on the day you retire. People come to me and they say, Hilary, I'm 50. I want to retire when I'm 60. I only have 10 years. Au contraire. You have to keep growing your money to pay for your life throughout your entire retirement.
Yes.
So
We're not dying in our
investing...
60s and 70s anymore. There's a whole nother several decades.
No, yeah. Yeah. And, when you look, the volatility of the stock market, the ups and downs of the stock market can be scary. It really are. The stock market is one of those, what's called marked to market investments in existence. But your house has price volatility too, right?
Absolutely.
But
We saw
people
that in the
feel...
last several years.
I know, but people feel very differently about the volatility in their home value. When you go on Zillow and the price isn't what you want it to be, so it's lower than you want it to be, what do? You close
Of
the
your own house?
browser.
Yeah,
Yeah,
nothing. You go, well, that's
nothing.
and you don't lose sleep.
Right. You just like, well, I guess we're not selling.
Exactly. We'll sell a different day.
But it's
Totally.
very different when it comes to stock market investments. People have been trained by Wall Street and the financial news media to sell. Why by Wall Street? Because when you sell, Wall Street makes money, right? They make money when you trade, when you buy and sell. And for the financial news media, like I said, they are in the business for the most part. There's exceptions, okay? There's exceptions to every rule. So I'm not making blanket statements, but you all know this to be true. They make money when they scare you. And so I just really invite you to lean into what, like I said, the stock market as a scoreboard for human ingenuity. Most companies really want to do good, right? They really want to make money for you as an investor. They're really trying. They're really doing their best. People are smart. People want to leave the planet a better place than they found it. And the stock market is one of your opportunities to participate in that exciting human capital, that human energy, right? The sense of people always want to make progress. We're always doing better, making better products, solving bigger problems in easier ways, right? Think about all the things we have today that we didn't have when we were a kid. When you and I were kids, if you went to the mall and you didn't meet your friend, you went home. You couldn't send them a text or find them on Find Me or give them a call on your cell phone. No, there was no such thing.
Yeah.
I remember the days.
There was no Uber to get there either.
There was no Uber. No, you had to call your mom. And she would come get you in the station wagon.
Exactly.
Yeah. So, one of the things, and that really is one of the things I talk most about, because I really am interested in women building wealth. And the stock market really is one of the most low cost, high performing, potentially diversified. You have to definitely buy index funds. And an index fund is a basket of stocks that are all similar in some way. The most popular index fund is the S&P 500. That's the Standard & Poor's index of US large companies. And there's 500 companies on the list. So that's where the 500 comes from. That's the most popular index fund. So that way you get 500 companies in one purchase, one ticker, one buy, and then you're diversified. But also, unlike buying real estate, for example, you can't spend a house. If you have $100,000 in a stock market investment and you want to spend $1,000, you can just go sell $1,000 worth of that fund and spend your money, right? So it's easy to interact with. You have easy liquidity like that. So, and I find that there's a dearth of understanding, especially amongst us women, about the stock market. So I'm really passionate about talking about that. Thank you for the opportunity.
Yes, I love it. And I would invite our listeners, especially in that bucket of like not really sure what the stock market really is, that over time we have this in our shop. because I also have a financial advisor in my household, the actual stock market over time. So yes, there's ebbs and flows, but you know the exact picture that I'm thinking of, right?
You
Where
have the SBBI chart in your house?
it is like I don't know, 5 feet by 4 feet.
Oh my God, my father
It's in
had
our
that my whole
spare.
childhood. That is so funny. So SBBI stands for stocks, bonds, bills, and inflation.
Yep.
And I spend so
Google
much
it.
time looking at this chart. It's like, yes.
Yes, and I point that out for this, and I'm like, I know you will agree with this, that the ebbs and flows do happen. You'll see them on the chart, but over time it has grown in a upward position. So you just have to take it when it goes low, knowing that that's part of the process to get higher. And I relate that back to everyone listening is an entrepreneur. They are running their business. So when they think about their profits, you reinvested, you hired some new staff, you bought that new delivery truck, you whatever, and your profits went down for a little bit. It's literally what the businesses in the stock market do. So profits might be great one year, might not be the next year, but overall, they
You
should
don't
be
run
improving.
screaming from your business when profits are down. Yeah.
Yeah, but hopefully not, because hopefully it was intentional or strategic, or you understand why, and now you can make changes to to bring them back up for
They
sure. And so
say, I'm sorry for it. Sorry, go ahead.
no, I was just gonna say it is relatable. I imagine if they look at the chart, and you can Google it, it'll be the first thing that comes up, that it would probably relate pretty close to their own P&L and profit line.
That is a good point. Also, the term passive investments, or passive income really has been popularized, and people talk about other things. Rental real estate is one of them, and they call it passive income, but it's not, because you have to manage it. Even if you're not physically managing it, you're paying for that management. And if there's a
Absolutely.
vacancy or a tree falls on it, then it's definitely not passive income, right? Now you're in a lawsuit, et cetera, et cetera. The stock market truly can be passive income. I mean, I have clients who earn more in their stock market portfolio in many years than they do in their, executive salaried positions in Silicon Valley or running their business, right? And that's a great place to get to. That's the symptoms of compound wealth growth, right? And they're earning that money in their stock market portfolio through no actions of their own. They didn't even click buy. I did it for them, right? So truly, truly passive income. Yeah.
Yes. So I know, let's go to the other bucket where there's some folks that are in the stock market, but they're also doing some private equity. They may have some ownership in multiple businesses, especially having entrepreneurs listening. That's pretty common. Can you talk about the differences? I'll give one, and I'm sure you have others, of like, if you're investing in other businesses, for the example you just gave, you want a couple $1,000s, you can go to your stock market and go sell some. But if you
sell a
own
small
part of the
portion of
pizza
it.
company down the road, and you're like, hey, I want to buy a new $100,000 car, can I sell some of my shares? Likely that small business owner who's not a public company is
Right.
not as liquid. So
Right.
can we
And
can we
so
talk about some of that? Because there are people listening who do have diversification or want to, or thinking about real estate, thinking about investing in other companies, and what those differences that they should be aware of.
yes, you just asked me for a graduate level investments course. Yes, we can talk about that.
And can we do that in a few
Absolutely.
minutes?
Can you give me, do you have is there a case study? Is there a particular person, or can we make up a scenario that this person is in, or
I was just thinking,
any
like,
specific questions you have?
like liquidity is one of the differences between if I was going to put my money in S&P or invest in either real estate or other private companies. But so
Sure.
liquidity was just one that came to mind immediately for me.
Sure. Some of the characteristics you want to be conscious of in your investments, we've mentioned. Are they liquid? Meaning, can you sell it today or tomorrow and get your cash the next day? Like 72 hours would be considered liquid. If they're not liquid, that's okay. It's not like illiquidity, as we say, that's the term, is necessarily bad. However, if you need money from your investments, then yes, you must have liquidity. So, what people sometimes do is build a core diversified stock portfolio that is liquid. And then with 5 or 10 or maybe 15% of their investable net worth, Then they're doing the more illiquid investments. So you're doing venture capital, angel investing, private equity that has 7 to 10 year illiquidity periods, basically lockup periods. So there's liquidity, there's marketability, meaning can you sell it at the price it's advertised at? So if you open up your Yahoo Finance app or go to yahoofinance.com, every stock that's publicly traded has a price. You can be pretty confident that if you own that stock and you went to your stock portfolio and you sold that individual stock, you would get that price. But think about the last time you sold a house, right? You go
Right.
to Zillow, and that's just like maybe somewhere in the target range of what your house would sell for, right?
Ours
And it
is
could be
not even close.
it could, it could be higher, it could be lower. So you would say a house is neither liquid nor marketable. Okay. Now
Mhm.
you can make a great profit on a house. So again, these are just features and characteristics of investments.
Perfect.
Diversification is definitely one of the only just flat out rules in investing. So Merton Miller is a famous investment manager, author, expert. He said, diversification is your friend. Diversification is your buddy. So, there's that phrase, don't put all your eggs in one basket.
Yeah. Chicken
Right.
Little, eggs. We have a theme.
Right. I mean, many of us, especially entrepreneurs, I mean, as a financial advisor, I hate to admit it, but one thing that we recommend to our clients, I can't bring myself to buy, is a disability policy. I count on my physicality, my body and my health so much that I can't even grapple with that I might become disabled and not be able to work, but still be alive. Right.
Mhm.
So
My listeners have heard me say, what happens if you're hit by a bus on a regular basis? Because that
now
is one
I
of the
have
things
life
you have to plan
insurance. I
for.
have a continuity
Oh,
plan,
no, you
right?
don't die. You just got hit. And now you're in like
Horrible.
traction for 6 months. Now what are you going to do?
It's unfathomable to me, right? So I'm embarrassed. That's my little I'm admitting that this is a weakness of
Transparency.
mine. Yeah. Yeah, but and same for most entrepreneurs, we are so undiversified when it
Agreed.
comes to what actually makes us money, which is our body, our health, the fact that you can speak and type and go to meetings and interview a new team member and train people and speak at the team meeting, and right, we're doing stuff with our bodies. And so this is what you're banking. You're completely undiversified when you're first starting out making money. The minute you put money into a 401k and buy an S&P 500 index fund, now you've got diversification. Now all your eggs aren't in one basket, and there will come a day when that nest egg can pay for your life if and when you either want to stop working or need to stop working. So diversification starts young. You should lean into it. It also helps with volatility, because when the stock market goes down, some investments will still be up. Okay. So
Mhm.
you have
Yep. Some
price.
industries are up while others are down. Yep.
Exactly.
Absolutely.
Exactly. So diversification. Let's see. History of returns. So the more unique, anecdotal, say unique investments that we've talked about, VC, angel, PE, these kinds of investments don't necessarily have a history of returns. You don't really know what to expect.
No, most of the time you have no idea.
Right. Whereas we kind of know what to expect from the stock market, depending
Got a
on
chart.
which index you buy. It's somewhere like 7, 8, 9%. It's been that way for 100 years, right?
Exactly.
And
Yeah.
so that's a history of returns. That's something you can bank on, count on. So a portfolio of PE investments, even if you could manage the liquidity, like let's say you laddered the liquidity, if you knew it was going to be a 7-year lockup and you buy a PE investment every year, so then in 7 years you start having an exit every year, you could do that, some kind of PE ladder. But the
I'm one of those
problem,
people.
okay, great. Good for you.
Do you
See,
have
smarty pants.
I'm yep, diversified. So I have some that cash out in 5, 6, and 7 years from now.
Yeah, good.
Mhm.
But what you don't know is what to expect from that exit,
Exactly.
right? So you can only plan with it when it happens.
And I think that's key that you just mentioned that goes back to that mindset, because when I invested in that, it is real estate, and I knew that, like, okay, I could potentially make the suggested return, or maybe I'll get my original investment back. So my mindset isn't like I need the certain percent, right? So it's the mindset. It's like, do I need that money tomorrow? No. Do I care if my return is somewhere in there? That's the goal. But yeah, that mindset comes back in.
You're considering what you know about your income, your spouse's income, your current savings, your current investment return rate. PE isn't necessarily an investment you should do in your 20s. It's not for people starting out. You want to have a base. You want to have a solid income. You want to have a savings account, a nest egg that's begun growing, right? And a lot of these investments are actually limited to accredited investors with $1 million in an investment account anyway. So you can't.
Typically
you're
not in your 20s, unless you somehow have a family.
More power to you. Yeah.
Good. Yes.
If you, unlike me, are not a person who disappears money professionally and managed to become a millionaire in your 20s, more power to you. Yeah. I'm proud of you.
Yes.
Also the cost of the investment. So according to Morningstar, which is the organization that came up with the 5-star rating system for investments, Morningstar got sued so many times over that rating system that they had to come out and say the best predictor of high returns in investing is low costs. So, you can have tremendous returns, but if the costs inside that investment vehicle eat up those returns, well, your net returns are bad, right?
It's net return. Exactly.
Yeah. So you have to pay attention. Then, of course, how is the investment taxed? Because net returns are after costs and fees and after taxes, because you can't spend what you owe Uncle Sam. So is the investment return taxed in the form of capital gains or ordinary income? What tax bracket are you in? There are limitless possibilities for combinations of that tax rate, because it's determined by what people's taxable income is and the state that they live in. So you need to know that answer. Usually, if you have your tax return prepared by a professional, your net effective tax rate is on the cover page of your tax return, so you can check that out, or just ask your tax person, what is my effective tax rate? And that's how you know, because each dollar is taxed differently. But if you earn one more dollar, that net effective tax rate is the rate you will pay.
Well, we have covered so much information today. You had mentioned something a few minutes ago that it hits my heart, because it's one of the soapboxes that I also like to share. And that is that it just takes a little bit of money and to start early. So I am all about generational wealth. And for most people, they think that's Elon Musk's of the world, or the folks whose parents are like trust fund babies, and a lot of visions of that is who generational wealth is for. And I am here to tell the world that generational wealth isn't about a dollar amount. It is about helping the next generation as young as when they're born. And so I started my kids out with the envelope system of learning how to budget their money. They wanted a new bike. I did a whole episode on this, and I'll link it. But even my daughter, who was in college forever, I feel like 4 years, and then an additional 2.5 years, is still putting money in the stock market, even though she considers herself poor. Like, Mom, I have no money. And I said, oh, well, she paid off a little bit of her school debt, actually her debt is paid off now by 25. She goes, well, I'm still putting in that dollar amount in my investment. So it is the mindset of
she
like,
doesn't even consider not doing
money.
it.
Yeah, it's her money, but it doesn't go into her checking account. It comes out automatically. And these are the things that we can do for our kids so early on. It goes back to exactly what we started here, is it's money mindset, and what that money is for, when you can spend it and when you save it.
I think of it as an act of self-love too. I mean, having been a person who extricated money from my life, and now being a person who hosts a podcast called Love Your Money, I feel that I am loving myself by making sure that I have adequate resources around me at all times. And that means doing the saving and not doing the spending to the size and proportion that I used to do. And when I walk into a room, it brings confidence. I have a level of pride and confidence about I did that. I've done that, and I know I'm going to continue to do it. I'm reliable, and I love to gamble. I actually go play blackjack sometimes. I live in Puerto Rico, so we have a casino here,
Yes.
and everyone says you're a financial advisor and you play cards at the casino. I said I absolutely love it, and I spend $250 and I'm done. I get a martini and I go home.
You know what's hilarious? That I did not know you were going to tell that story. Literally this morning, for whatever reason, maybe it was like a premonition of this podcast. I was thinking about how I am in Vegas or anytime. I also blackjack, but this is me. You will probably get a kick out of this again because I said I spend where I want to spend, but I'm very conservative in other ways. So I will usually put down $200 blackjack, and I will
Yep.
play. And you go down, obviously. You lose some of that. You play, but as soon as I start getting ahead, I start moving my chips off to the side until my $200, and I
It's
put
like a
that
little
in my
sport.
pocket. So now I'm just playing with house money. It's other people's money. My money's back in my pocket, and I am much more risky now because I'm like, all right, I played, I got my money back, and now I'm playing for fun.
You
I
are
do that.
so cute. Yes, it's fun. It's just a game. It's
Yeah.
cheap entertainment. I love
Yeah.
it.
And I haven't always been able to put the initial amount back in my pocket, but that is sort of like I'm willing to lose it. You have to gamble. But
Correct.
in this case, I'm like taking little chips off the table, putting them literally in my pocket so that I don't get
Which is
greedy and
like a
think about
metaphor for how you build wealth. So good for you.
it. Exactly.
Taking the
I
chips off the table.
taking my chips one at a time. Like, all right, it's not a $200 investment anymore. Now it's 175. It's 150. So I'm like, all right, it's free money now. It's girl math.
And that is how you gamble like a wealth builder. See?
There you go. Exactly. Well, we covered so much, and I know for some, both of us being financial minded and being married to a financial advisor as well, I'm sure we talk some lingo that might be over some of our listeners' heads. So I do want to make sure that I put all of your links and your podcast in our show notes so that folks can reach out to you and kind of like explain their situation and can get a little bit more personalized because we covered
Thank
a lot
you.
in a very short period of time. And I
We
realize
covered a
it's
lot.
a certain lingo, and especially for those bucket 3 folks that haven't had some of this education. So I want to make sure
Yeah.
that they have a place to go.
I really appreciate that. Yeah, that would be great. And of course, we offer, complimentary initial conversations just to see if we're a good fit. So, no harm, no foul. If we're not the right fit together, we'll be really like transparent about that. I mean, I
Mm-hmm.
don't want to, I don't want to take people's time unnecessarily. So we're happy to have a conversation.
Yeah. And if it's
And
just education, your podcast is amazing. So out of your
thank you.
hundreds of episodes,
I
you
appreciate the
wrote,
kudos. We
yeah.
work hard on that podcast.
Yeah, I was happy about I'm shooting for almost 100 here, and then I saw yours. Like, wow, I've got a ways to go, but good stuff.
Thank you. I appreciate it. Yeah, you can find everything about what I'm up to on our website at hendershottwealth.com. And there's a contact form there where you can schedule a call.
Perfect. Any last words for our entrepreneur women who are listening and thinking about their investments?
Well, of course, I'd love to be your partner in achieving everything that's important to you financially and beyond. I mean, building wealth, yes, it's about money logistics and paying your bills and saving money, but really it's about your freedom and autonomy and you authoring your life and you fulfilling on, the reason you're on the planet. And so our client relationships are really meaningful, really just I have a deep gratitude that I have the role that I have in life. And if, thank you for teeing up the podcast. If you have room in your podcast lineup, check me out at Love Your Money, everywhere you download podcasts.
Awesome. Again, so thankful. And we'll probably have to come back like 5 more times to
Let's do
continue
it.
the conversation.
Next time we can talk about craps versus blackjack versus poker. No, I'm kidding.
That's a lot for me. Maybe I'll learn a little bit more, but I'm still taking my chips off the table no matter what. That's just my mentality.
Love it.
Thanks again, Hilary.
I hope you enjoyed today's episode. Please be sure to hit subscribe on your favorite podcast platform so you never miss an episode. The Women Choosing Growth Show is not just another podcast. It's a tribe of women helping each other grow. So please, share this podcast with all the women entrepreneurs that you would love to see succeed. If you'd like to know more about customized business advising through Cultivate Advisors, download business tools, or sign up for upcoming events, visit www.womenchoosinggrowth.com. Once again, that's www.womenchoosinggrowth.com. Remember, we are in this together. See you on the next one.